right. Well, thank you all for taking the time to talk a little bit about developing a smart self-service strategy. Had a great time so far. Very, very impressed with this event. The fact that it's second year, I think, is kudos to the BankSpaces team. You guys are doing a great job. So maybe little introductions first so you guys can kind of situate us in the industry. My name is Ben Spann. I run the National Accounts Sales Division for NCR Atleos. Been in the financial services industry for about 17 years, always on the vendor side of things, so calling on banks and credit unions such as yourself, and really had a kind of a wide berth of experience in terms of the type of accounts calling on. So I started in community bank space, so smaller community banks. Also worked for a number of years supporting our business with Cardtronics when Cardtronics was a customer of NCR. So a large global network there, and then now work with kind of the top 20, 25 banks within the US. So been able to see a lot of different strategies and different niches within the market there. And obviously had the opportunity to work with both Chad and Brendan here at Truist and Capital One for a number of years. So let you guys do some quick introductions and maybe let them get to know you a little bit. So Brendan, start with you.
Hello, good morning, everyone. Brendan Watkins. Have the pleasure of being at Truist for almost 2 years. My responsibilities are to lead ATM and teller channel strategy there. So what that means is we deal with all the transactions. So our transaction platform, our experience for our clients, but most importantly, our teammates. So when you think about things like transaction migration, kind of well positioned to figure out the ebbs and flows to do what's right for our clients and our teammates. Prior to Truist, I worked for a vendor, Fiserv. That was a unique experience because I learned that there's more than just large banks across the country. There's 4,000 of them, and that provided a lot of different experiences there. So at Fiserv, I was leading the ATM product, so driving 60,000 terminals across 2 switches, understanding how we can provide value-added services like managed services for clients across the board was a great experience too. That also kind of taught me that there's a big difference in scale when it comes to delivery. So a lot of the innovative things you could do as a smaller regional or credit union, it's kind of harder for some of the larger institutions to implement. And then before Fiserv, I was at Bank of America for about 13, 14 years. Cut my teeth in the digital space, working through good old elimination of paper initiatives, bill pay, Zelle. And then I landed in the ATM space and couldn't get out. So that's where I've been. So pleasure to be here.
Chad?
Yeah, and hopefully my voice is okay. It's Kevin Griffin on 2 nights ago. He got us up there singing, being louder than the women, and I went really gusto for that. So my voice is a little bit weak today. But Chad Bruhn, I've been with Capital One about 4 years now. Actually, it's interesting because Capital One was my customer from the vendor side. From the fintech companies I've worked for before for 3 different years, or 3 different terms. And I started working with Capital One back in 2012 as a customer. And I was working at that point in time with Windcore Nixdorf. I was running the US business. And then after I left Windcore, I went to NCR and I ran North America. I had the pleasure of giving Ben his quota every year, but she always complained that it was much too high.
He wasn't good at that.
So got to know him, and I actually got to work with Brendan as well, from Fiserv being one of my partners as well. So we did some work together, so it's interesting that we're all up here talking together. I actually started off in the self-service industry back with IBM. That was my very first career out of college. And I don't know if you guys remember, IBM used to make ATMs. And so I've been in the ATM self-service cash industry back for probably about 29 years. So seen a lot throughout the years.
Started when you were 10, right?
Started when I was 10, yeah. And it's interesting because, coming into Capital One being the first time I worked for a financial institution, I was able to work with the smaller credit unions, the smaller regional banks, and even the large national banks. And I always knew at some point I was going to go work for a bank and take all that and apply it somewhere. And it was Capital One called me at the right time 4 years ago and convinced me to come work for them to run the business. So I'm responsible for all of our cash payments in the bank. So I support our commercial, small business, and our retail customers. I run our ATM channel. Pretty much anything that touches cash, TCRs, all the currency discriminators my team manages. So live in Atlanta and happy to be here in Florida today.
Good deal. Well, thanks for that. So One of the things that I kind of thought we might start with, we've talked a lot about technology within the bank, different types of technology. Obviously, there's the pace of change in terms of technological innovation. It just keeps getting faster and faster. Companies like mine are rolling out new functionality, new capabilities at the ATM. We throw it out there and want you guys to take advantage of it and buy it. I think the more important driver of technological innovation is actually you all and the business strategies that you're coming up with and how you're choosing to present your products and services to the market. And that obviously can take a little bit different flavor for every financial institution. Some things I think are consistent across the board. Everybody wants to delight their customer. But how you do that and what you offer through the channel can vary based on your specific retail delivery strategy. So Brendan, I'll start with you. Maybe talk about how Truist views self-service in the broader context of your retail distribution strategy and how that works.
Yeah, so I was lucky to have Shauna come up before me and display all the great images of how we have Truist branches coming up and the flow. You can see here behind us, we have the ATM. Looks kind of old and decrepit. And I think part of our challenge, all of the ATM geeks who sit on our team, is we want to put the latest and greatest technology in there. We want them to be the first thing you see when you walk into the branch, the last thing you see when you drive away, and you have to have a great experience. But within our space, we look at it as a strategic arm of our branch teammates, our bankers. So we look at an ATM to do the heavy lifting of transactions. And it goes with how we position it within the branch and also how we educate our clients on the best usage of them. So at Truist, we are very keen into our 3Ds, digital deepening and deposits. And we look at our ATM to help deliver that strategy across the board. So we're very attuned to growing with our clients. And we do that by providing ATM experience, which is right for them. So when you think about the digital element, an ATM is uniquely positioned to bridge the physical and digital world. It's the only channel within the branch where you can actually have a digital experience where you authenticate with the client, pull up their profile and start their transaction. And then it ends with either a dispense of a physical media or you can actually do a deposit, right? So we're very mindful of ATMs have to be up and running. It has to be a very smooth experience to have that repeat digital engagement across the board. The other aspect, very obvious, deposits. So when you think about where the branches are and who comes in there, it's just not retail clients who have debit cards to access the branch and all the services with a normal teller. You have to think about the commercial clients. You have to think about small businesses. And what we're thinking about in our space is a client experience to where we could tap into some of those things. So how do you use your ATMs as a strategic element to invite more segments to use those devices? And then going back to deepening, one of the things that we're definitely mindful of is using an ATM as a billboard, right? So we have them in an opportune spot. Truist has over almost 3,000 ATMs. So we look at it as a strategic way to illustrate at a branch level, at a location level, kind of whatever's going on at the bank. If we have a great credit card offer, we display that. And then also intelligently is we have the ability to actually customize some of our receipts even more. So we're doing things to make sure it's a personal experience. Doing something as simple as greeting a client by name goes a long way. And actually understanding and getting down to the segment level is really critical to drive that strategy for us.
Great. Yeah, thank you. So Chad, I was thinking we've talked a little bit here on different panels about Capital One's cafe network. So you guys do have some traditional branches, but you also have, I'd say, a very different model in terms of the cafe and what is required out of your self-service devices is really driven by the model there. So maybe talk about it in that context a little bit, the cafe network and what that means in terms of self-service at those locations.
Yeah, it's a good point. And so we, like very similar to Brendan, we have our traditional brick and mortar branches in about 7 states, just over 250 of those. Those have been shrinking, for quite some time. Where we see growth in our go-forward strategy and our model is going to be growth in the cafe. And so we just opened our 60th cafe. Heard about that yesterday, Fordham Road up in the Bronx, and I had an ability to go up to the grand opening and see the locations, interact with customers in that community. Our cafes, if you haven't been into a cafe, a lot of times you don't realize that you're inside a bank. Heard a little bit about it yesterday. The customer stops at the threshold. asking sometimes to come in. And so our cafes have been designed as a community destination. And it is a very different environment. You might be a customer who walks into a cafe or a prospect that walks into a cafe, and you're not going to get approached by anyone at Capital One to talk about banking. It's really like we're wanting to create a community space. And those community spaces drive a lot of interactions of people coming in throughout the door. Every once in a while, they look up and they see an ATM over here, and they start to ask, like, what is this place? And they come to find out that this is a bank, this is a financial transaction center. So all of our transactions in a cafe go through the ATM. So our associates, our cafe coach, and ambassadors are not allowed, they're unable to do any kind of physical transaction. So the only two transactions that actually happen in a cafe is at the coffee, if you're going to buy food and beverage, or the ATM channel. So those are the only two places that we actually have an NPS score based on those transactions. And so for us, knowing that that ATM is critical, they need to operate, they need to work when a customer needs it, we put a lot of effort into ensuring that the reliability of those ATMs is there for the customers. And it's interesting, it's not uncommon at all. We actually have typically in a lot of our cafes more cash deposits than we have cash withdrawals in our ATM machines. And a lot of that's because, as you guys know, probably a lot of you in here have a Capital One credit card in your wallet. So we do credit card payments at our ATMs, and that's been a big driver of also getting customers to come into the cafes.
Good deal. So thinking about maybe a little more tactically in terms of the physical space. So obviously there's a lot of different technological changes with ATMs. There's also security concerns that we're all very mindful of that impact a number of things around the ATM channel. But are there components within the ATM strategy that actually affect the physical placement of the device within the branch? So whether it be a new build or even renovation, how do you think about placement of the ATM within the physical space? And Brendan, I'll let you kind of go first there.
A good question. So I think we're definitely attuned to growing with our clients, and that's really in the spaces that we are, the markets we're in today. So we don't have a lot of de novos or new market entries happening over the next couple of years. So we're definitely mindful of the constraints of utilizing the existing space. And part of that strategy, specifically with the ATM side, is 24/7 access, right? So thinking about your drive-ups are definitely key. There's a security element to that because they're kind of exposed depending upon how they sit on the island. And then also vestibules. So depending upon the region of the country you are in, is it advantageous to have vestibules where clients can come in and bank on their convenience, 24/7 hour access. To get a little more granular, what I'm definitely mindful of, and it causes space concerns from a design perspective, is I'm a big fan of through-the-wall ATMs, especially where teammates can actually service a device. So we're not talking about teammates fixing components. We're just talking about removing cash and adding cash. The key things to help with self-service adoption is to make sure ATMs are up and running. So with that easy, safe access to cash and replenishing, it enables you to have ATMs that are up and running more often than not. The other component that we're definitely mindful of too is thinking through the modularity of a branch. One of the tough things, ATMs are not cheap, but when you think about self-service adoption, there's a lot of institutions thinking about inline ATMs, and there's even a sense of people having ITMs out there to have that gentle bridge from teller line into the ATM space. So we're definitely mindful of those elements when it comes to where we deploy and how we deploy to round out our ATM availability strategy.
Yeah. What about you, Chad, for Capital One? Anything there informing the actual design based on the placement of the ATM within the location?
Yeah, and it's interesting too because again, I have the two models, the branch model where our branches are all from prior acquisitions, and if you look at Texas, Louisiana, from our Hibernia acquisition years ago, in those locations, the branch is what it is, and we've spent very little in renovating and really thinking about the branch as far as the placement, because what we bought, we inherited what we inherited, but what we spend a lot of time on is looking at how do we ensure that the customers, when they need to use one of those ATMs, that it's operational. So we've gone back and looked at. We created microsites. For example, you may have a microsite that's a drive-up, and a microsite we define as it's a unique customer experience. So if it's a person who wants to do transaction and banking from their car, we'll measure performance of that microsite, and we'll start to look and say, if that microsite performance starts to degrade, we'll look at adding another ATM into that exact microsite. So then we'll look at how do we add 2 drive-through ATMs that will basically create redundancy. So we spend a lot of time on redundant microsites. We look at customer experience, and even if the drive-up ATM is down, you might have another through-the-wall walk-up ATM that you can walk up to or go into the lobby. All of those we look at as different microsites, and we are exhaustive on the way we measure customer experience and looking at the performance of that. We understand that when someone needs to make a financial transaction and they've driven to a destination to do that experience has to be one that they expect to go there, perform their business, and drive away without the card being taken or the money getting jammed inside the machine. So that's kind of at the branch. In the cafes, is again a different experience. Our cafe model, we have, again, because there is no people inside a cafe that can actually do those transactions, we overinvest in ATMs. As you mentioned, ATMs are expensive, but they're not as expensive as people. If you look at the number of transactions that our ATMs do, we have a minimum of 3 ATMs inside a cafe, inside the building. More common, it's 4. We have some locations of up to 9 ATMs inside the location. So because of that, we ensure that pretty much at any given time someone is in one of our locations, they're going to be able to conduct a financial transaction.
So I'll just say for the record, I don't believe you can overinvest in ATMs.
I agree.
Just kidding. So actually, it's kind of on that line. So obviously, anytime that we're talking about branches, whether it be microsites, cafes, or whatever, that's the bank expanding their physical presence, right? You're trying to bring your products and services to people in an area, regardless of the type of specific model you're using. So we all know that branching can be expensive, right? Finding land, brick and mortar, all of that. Are there other ways that both Truist and Capital One seek to kind of enhance that physical presence without maybe building a branch? So remote sites, ATMs, things like that. Brendan, what does Truist do there?
Yeah, so Truist had a merger a couple years ago, right? So a lot of opportunities to think about which locations to invest in, which ATMs, the placement, and part of that, a great team got together and thought through where to deploy. I think they leaned in on remote site locations. So remote sites offer you a great opportunity for whether it's new market entry or just to show your competitors you're still in the area. There's a branch really close to my house where I think there's a Wells, there's a B of A. We slapped a nice big Truist ATM in the middle of the parking lot to make sure that the purple sign is very available for our clients. So it's an indispensable way to offer transaction services, and also if you have the right technology to also have deepening opportunities, let clients know what product and service you have offering to them, and using the ATM as a billboard. The other thing we're definitely mindful of within the space are ways in which you could deploy it faster and less expensive. So we have a lot of partners, whether they're universities. We have a great partnership with Liberty University and Truist, where we actually have ATMs deployed on campus to start to help grab that younger demographic and get their banking habits started in the self-service environment. And then also we have a very large commercial business, so our wholesale division. We have a lot of great clients who are asking specifically for ATMs to be deployed on site so they can actually build out a bank at work program. So we do a lot of partnerships with them, and we actually utilize a third-party vendor sometimes to help do that. We've seen that trend. I think, Ben, you can also speak to the trend too around where a cash dispense only device is something very easy to deploy and provide still the branded solution for your clients, but it allows you to be a little bit more nimble and fast when it comes to deploying, because as a bank, you go get capital, you get it approved. It's a lot easier to have an easy ATM to plop in a ballpark using third-party services. Yep.
So on that note, obviously, I'm sure I know both of you are aware. Most people in here may be aware also that NCR Atleos, the company I work with, we own and operate 50,000 plus ATMs in North America. And really, we partner with the largest retailers in the country, a bunch of the big names that everyone would know. And then we make those available for banks to partner with us, whether it be physical branding or just surcharge-free access or whatever. So Capital One, I know, has kind of gone good ways in that strategy. So maybe talk a little bit about that, what you're trying to accomplish there, how that helps Capital One with kind of a specific problem of having a lot of customers, credit card customers specifically, all across the country, and maybe not the physical branch presence that most other institutions would have that is really commensurate with the number of customers you have.
Yeah, no, happy to talk about that. So, 2012 ING, acquisition came out, and that's when the cafe within Capital One was born. And at that period of time, Capital One was, very much a physical regional bank, right? Physical footprint, 7 states. And, the key to expansion was a physical distribution network. And I remember, it was interesting, I worked for Wincor Nixdorf at the time, I ran North America there, and I met with Capital One, and they asked, what would it cost to build a nationwide ATM, 16,000 ATMs? And I was like, wow, I'm going to make a ton of money on this deal. Of course, they never did that. No one would ever do that, just the capital intensive cost of doing that. But it was the thought process of how do we actually scale nationally? And at that point in time, Cardtronics with the Allpoint network was able to provide a part of that service. And that was really just giving our customers the able to actually have cash out, right? You can go and actually get cash. But solving for cash deposits was really the challenge, right? And no one was ever at that point in time able to solve for cash deposits unless you did it inside your branch network, or if you had in stores. And so with that, our cafe network started expanding across the largest MSAs in the US. And again, we have 60 of those now across the United States. But that's still not enough density, right, to really form a nationwide bank where our customers could drive within 10 to 12 minutes and have a place to deposit cash. And so because of that, Capital One for a lot of years was, really a savings first, and, typically primary checking was with somebody else if it was outside of our branch footprint or our cafe network. And so, a few years ago, I think the game really changed, and that was with Allpoint, came out with Allpoint Plus. And with that, we were initially very excited about that because all of a sudden, within a day, we were able to scale to 3,500 locations across the U.S. where our customers could go to an ATM and deposit cash. And again, there was no capital outlay for that. So you talked about how hard that is. It was just an OpEx model of understanding, like, we pay per transaction. And so our customers have really adopted that very well. The other thing that's interesting is if I started to look at our customers and my cardholders that have a Capital One debit card, last year was 53% or 56% of my customers are going to third-party ATMs, whether that's a bank-owned ATM, a MoneyPass ATM, or an Allpoint ATM, and conducting transactions. So I started realizing that, my own ATM network of 1,250 ATMs are doing less than half of the transactions. So it told me my customers are okay going outside of my cafe network or my branch network. In fact, that's the fastest growing area of transactions. My own ATM channel transactions just is growing because we're growing our cafe network, but really it's not from a net new perspective. So that's taught us a lot about where do our customers want to transact. And if you start to look at just even in your branches, if you have a branch network and you have branches that are, especially in the Southwest or anywhere where there's drive-up banking is more common, start to look at where your transactions are occurring, and a lot of times more than 50% of the transactions are actually occurring in the drive-thru, which means people aren't even coming into your branch, but the branch is still that destination. And again, we heard about yesterday how important it is to have the branch, the physical network, when customers have a need of servicing or a challenge. But I really loved hearing and seeing some of the concepts that we saw yesterday about really focusing on the drive-up experience, because more and more, depending on where you're located at, that is definitely a very important design element of how customers want to transact, where they want to transact, and a lot of time it isn't during branch hours. And so it's really important to really think about that in the branch design as well. Yeah,
absolutely. That's a popular destination in certain areas. So we got about 4 minutes left, so I'm gonna do one question each, different question for both of you here to end it. Brendan, I'll start with you. You mentioned about customer experience in one of your first answers. So obviously, I think everybody here has said a number of times, that's where we start, right? We start with the kind of customer experience that we're trying to create. So when you think about that specific to the ATM channel, what do you do to enable the customer experience you want? And then how do you track and measure that within the bank?
So it starts with good partnerships with the technology team, and also good partnerships with your branch teammates. So part of it is you deploy something, you have to make sure teammates in the branch are aware to kind of help propagate the message and the value. So we're looking into ways to where we're addressing segment level access, as we said before. So one of the use cases that we're still working through is how do you provide small business commercial clients access to your ATM to do deposits and be innovative with it, right? You know that they're to do a deposit, so how do you speed it up? You tap a card, you say, what do you deposit in cash or checks, and you send a digital receipt and let them move on, right? So those are the elements that we're looking at. The other things we're also just the basics. I think people think it's innovative, but for the ATM geeks, it's multiple denominations is key, right? So telling someone you're going to walk up to a device and you're going to get ones out blows their mind, and they'll try it out just to see if ones will actually come out. And then the key thing just to operate a little bit better, recycling is key. So that's stuff that's transparent to even branch teammates and the clients, but it's vital to help with innovating in the channel. And then also being able to have a pulse on what's happening. That's data coming into our incident management system, understanding which devices are breaking the most often. Also thinking through your cash forecasting cycle, which replenishment cycles you need to update. And then other elements is just a simple survey. So the way Truist surveys clients is we have email surveys that go out, but I think you all can appreciate too, no one really answers the email survey unless they're pissed about something. Yep. So they're kind of skewed. So just having an on-screen survey is vital to have, almost like an app experience. Like, how was your app? How was your experience? You're more willing to say, yep, 5 stars, 4 stars. Or again, if you made somebody upset, make it a 1 star. But you have the opportunity to kind of type in what was wrong. But being mindful to those things is definitely key for innovating in the ATM space.
Yeah, good. So
yeah, and for us, I would just say, we spend a lot of time, like you mentioned, just talking to our customers and what do our customers want. Every single survey since I've been at Capital One, the number one thing they want is reliability.
Yep.
And that's interesting, right? Because you think about making the screens fancy and spending all that time focused on CX, and we don't, a lot of times as a bank, think about CX. It means it just needs to be simple, fast, and it needs to work. Again, that's the number one thing our customers tell us. So that's been the big focus. In fact, when I joined Capital One 2021, we were in our peer group of 22 banks, number 14 in J.D. Power's customer ATM channel satisfaction. That's one reason I joined. It was a very low bar. Figured I could only go up. And last year, we moved to number 2. This January, I got an announcement we were number 1. You know what we focused on? Reliability.
No.
We focused on reliability. We implemented cash recycling for our fleet. So we're probably about 70% of our fleet is now cash recycling. We don't have cash bin fools anymore like we used to. We don't have cash outs like when a customer needs that machine. We also focused on the jitter point. Multi-denom was a huge boost. We've migrated a lot of transactions. We do ones as well. A lot of people say, no need to have ones, but we do 1s, 5s, 20s, and 100s. And sometimes we're thinking, do we need more denominations than that really to give customers what they want? So it costs us more to actually do that, to operate, from a cash perspective. Again, the cash vendors and our staff that does branch servicing. So with that being said, though, the results are the results, and we're really proud about just knowing that now we have such a good, reliable ATM network that now we're starting to focus on the bells and the whistles. We're looking at adding one-to-one CRM marketing. Capital One is probably the biggest marketing spend of any bank out there, yet we never did ATM marketing until a year ago, believe it or not. Walk up and see the please wait screen, you see a little wheel spinning, and that would drive me crazy, but it took a lot of years to get our tech partners. You talk about building those relationships with tech partners. I've had to have patience with that, but we're there now. We're really starting to try to go down to that next level to really build a user interface and that the exceptional customer experience that they expect to start to see.
It'll be interesting to see how you can improve from number 1.
Yeah.
Figure that out.
Yeah.
All right. Well, hey, thank you guys very much for spending the time here and talking with us a little bit, and appreciate you all's time and attention.
Thank you, guys.
Thank you.